Hello and welcome to BQ Prime. You're joining us on this special conversation with Mr. Piyush Gupta of Crisil. We're just here to discuss a report that Crisil's Market Intelligence Group has put out, which talks about the financialization of the household savings in India. Now, according to their estimates, in about 5 years, that is by 2027, we are likely to see more than 300 lakh crore worth of people's funds being managed through financial instruments as well as managed funds. Thank you so much for joining us, Piyush, on this conversation. Welcome to VQ Prime.
Thank you very much. Happy to be here.
All right, Piyush. Let's quickly get down to the questions here. So this 315 lakh crore number that you have quoted in this report, I'm just trying to understand the basis of this number. Where is this coming from? Where are we now? How soon? This 5-year time period that you've given. What are some of the reasons? So just a sort of a brief of the report.
Yeah. So as part of this report, we have basically covered investment products which are available to the investors. So we have basically covered segments like mutual fund, AIF, PMS, insurance, and retirement funds. Of course, there's some overlap of retirement funds with mutual fund, but these are the, I would say, primary routes through which the individual savings are routed into the capital market. If you look at each of these segments, they account for 135 lakh crores of assets as of this financial year. We believe this will grow to 315 lakh crores in 5 years' time. Now, if you were to look at each of these segments, you can divide these in each of these products into two broad categories. One, which is catering the retail segment primarily, and second being PMS and AI, which caters to HNI and institutional segment.
Right.
So, and hence the drivers are also different for each of these segments. When we look at say, mutual fund, insurance, and retirement funds, their assets are expected to grow one on account of rising awareness about products like mutual fund. The industry has a campaign which talks about benefits of investing through mutual fund, which has definitely helped the industry. One is increasing the penetration and also bringing about awareness about mutual fund as a product. Second, when we look at insurance traditionally had a higher share. It continues to have higher share among all the managed products. Total assets today is 52 lakh crores. That will continue to remain as a case even 5 years down the line. For insurance, I think it's more about the product has gained traction because of growing awareness about protection. We had COVID a couple of years back, which has meant that people have realized the importance of protection. So this is something that we believe will continue and will drive the growth for the insurance industry.
Okay.
In terms of retirement funds, I think it's largely the formalization of economy, which is driving the growth of retirement products, including NPS and EPFO. For alternate assets, it's more about HNIs and ultra HNIs seeking higher returns, seeking product differentiation compared to standard products like mutual fund. That has meant that there's a greater traction for these products with the investors.
Okay. I'll break this up and sort of tackle each of these topics. Firstly, I just want to get a sense from you in your assessment and in your assessment of what past investment cycles have looked like versus now in the future as things sort of improve. I'm just trying to understand what is incentivizing, or till now at least, what has incentivized people to stay away from some of these financial products, and what has changed on the ground that they are probably now looking at these as an option.
Yeah, so traditionally, if we were to look at India household savings, while traditionally we have been a higher saving economy, our savings have been higher than the world average. But in the past, we have had higher savings going to physical assets like gold and real estate, which has started changing. As we speak today, financial assets have gained greater market share compared to the past. Few factors that have played out. One, as I spoke earlier, one is growing awareness about these products.
Yeah.
Also, the adoption of these products, especially among the younger generation.
Right.
They have a longer investment horizon. They can look at these products. Also, the risk appetite to take exposure to these products has been improving, which has meant that these products have gained have started gaining higher traction among the investors.
Okay. What do you think does this translate to? So as more money comes into managed funds or managed financial products, what does it mean for, say, the broader capital markets in India? You talk about equity, talk about debt. What does that look like to you?
Yeah, it's a significant trend that we are seeing. And see, in the past, what used to happen is the equity markets, if you were to see, they were driven by flows from FPIs.
Right.
If you look at current data, the domestic money has a significantly higher share compared to FPI in terms of Indian equity market or Indian capital market, which means that there is a greater stability in terms of capital flows coming into capital markets. Second is it also provides a hedge against volatile FPI flows. This we have seen even though we have seen volatile capital markets globally, the Indian markets have remained resilient, and that's primarily because of the stable flows that have been coming through. Say, for example, SIPs in mutual fund or maybe PF money coming into ETFs. They have provided sort of a stability for the capital markets.
Okay. I also wanted to get an understanding from you on where is there any understanding of where this money is coming from? Is this largely urban investors who are probably a little more savvy with the variety of financial products that exist, or is it sort of a broader Indian phenomenon?
I think the flows are still dominated by urban population. Even if we look at mutual fund flows, you have a distinction between T30 and B30. Again, T30 dominates the overall AUM pie among in the mutual fund AUM space. Having said that, the B30 has gained share, which has meant that there's a greater amount of money coming from B30 cities. But still, I think it's still dominated by the urban population and the penetration into tier 2, tier 3 cities. There is still a long way to go in terms of achieving higher participation.
Okay. Quickly, one thing I noted in your report was that there has been a spike in the passively managed funds. Investment flows have grown there. I wanted to understand from you, is it coming because people are trusting these financial instruments more, or is it because there is a historical saying that passively managed funds do better than actively managed ones in the long run?
So passive funds, couple of factors. So one, if you look at institutions like provident funds, they have kind of adopted ETF as a route to participate in riskier asset class like equity, which has meant that there is a constant flow of inflows that is coming into passive funds, which is ETF. Over the last 7 years, 2015 is when they started investing into equity, and that's when the flow has been there consistently into these funds. Second, also, what we've seen is we did a study on performance of actively managed funds versus passive funds. What we've seen is large cap funds have seen a decline in alpha. We've seen that the number of funds have not been able to beat the benchmark, especially in the last 3 or 4 years, which has also meant that even the individual investors have started looking at passive funds as a route to invest into equity as an asset class, especially in the large cap space. So these are the two factors I would say have been contributing to the overall growth of passives.
Okay. What continues to be the most favored financial product for investors?
I think it's still fixed deposits. If we were to look at financial savings, FD is still a majority share in the overall household saving. Just to give some context around it, currently, if you look at the managed product industry, which is 135 lakh crores, they account for 79% of the total fixed deposits that we have. So, which means that FD still dominates the overall pie of savings, financial savings that the individuals have in India.
Right. Another point I wanted to ask you. So, in your report, I also noticed that life insurance is sort of a favorite as far as some of these investors are concerned. The question of savings versus protection, because as you said earlier, that COVID has sort of educated users, educated customers into believing that they need some kind of protection, financial protection for themselves and their families. But where does household savings come into the picture? Because this doesn't kick in unless, of course, something happens to the person who's buying these products, right? So it's not really a savings product as such.
Yeah, so that's been the case. So while insurance industry enjoys the largest share among all the products, savings continues to be the dominant factor in the overall insurance AUM. Having said that, there is a change in terms of, if you were to look at growth rates, the protection per se has seen a higher share in terms of premium coming in. There's a growth in terms of protection that we are seeing. Even the sum assured that is there is a growth that we have seen in the last few years. But it is still dominated by savings. And there's a long way to go in terms of having that the protection gaining a larger share in the overall, I would say, insurance AUM that is there.
Okay. Lastly, I want to understand from you also is investor education or sophistication as far as that is concerned. Now, I know that you're looking at it from a purely numbers perspective and where that is going, but behaviorally, do you think that there has been that change that has come into India, looking at the way people are adopting these products more?
So I would say, see, awareness is something that has to a great extent come in. Each of the industry segments, like say mutual fund or insurance, they have their own campaigns to increase awareness about these products, managed products, among the investors. What remains to be done is the financial education or financial literacy or education. There is still some work to be done. And that's where some of the innovative ideas in terms of making investors understand the nuances of these products. End of the day, these are capital market products. They have their own set of risk factors. That is something that still requires some work to be done. If you were to look at sophistication, there's also another aspect I would talk about, sophisticated products like AIF and PMS. They have seen significant growth. If I were to look at AIFs, the commitment raised by AIF in the last 4 or 5 years has grown by 50% CAGR. That's a significant growth. Of course, it's a small base, but there's a significant growth that we are seeing. The number of AIFs which are getting registered in the last 5 years, 100 plus AIFs have got registered. And in this year, it is likely to cross 200 mark. So what does it mean? The HNI and ultra HNI segment and also domestic institutional investors have started looking at these products as a means to take exposure to alternate as a product class or as an asset class. So while there is an increasing penetration we see through standard products like mutual funds and retirement funds, there's also a growing participation in alternates through AIFs and PMSs.
All right. Thank you so much, Piyush, for joining us on this conversation and taking us through some of the key highlights of your quite excellent report, to be honest. Thank you so much for watching. Please do catch our story about Crisil's news report on the website, and you can watch more videos on our YouTube channel. Thank you so much for watching.
Thank you.